Hi guys, this is the last video in our tax smart investing series, and I'm talking about the last type of investment that can be made that gives you certain tax benefits. Now, all the investment types discussed so far, retirement annuities and 12J investments, all need to be made before the end of a tax year, which is 28 February, including the final one, which is a tax-free savings account. Now, a tax-free savings account is essentially a discretionary investment that you can make. You don't get a tax deduction for it like you do with the other two types of investments, but what you do get is you don't get charged any taxes that are attracted by the growth or the income generated from this investment type. So you can put money into a tax-free savings account and you can earn dividends and avoid the 20% dividends tax. So your dividends in a tax-free savings account are 20% higher than the dividends you earn on shares or on funds that are directly in your own name. Capital gains incurred by switching from one fund to another are completely avoided, which as an individual saves you a maximum of 18% just on the capital gains that you would incur when either buying or selling shares or specific funds that you would incur in your own name. And you don't pay any income tax, which could be a saving between 18 right the way up to 45%. So it just basically means all the different types of taxes that investments can attract, which is dividend tax, capital gains tax, and income tax, are completely avoided when you wrap them up within a tax-free savings account. Now, the options to invest in within a tax-free savings account are numerous. There are all sorts of options and different risk profiles for different individuals. Now, the government has been very kind to try and encourage people to save by giving them this tax benefit, but they're not completely benevolent, in that they can't afford to give away all of their tax revenue. So they have capped how much you can invest in these tax-free savings investments. You can only, at this point in time, put 33,000 Rand a year into such an investment. Anything more than that will actually result in a penalty. So you don't want to invest more than 33,000 Rand a year or 2,750 Rand a month. The other limitation is a 500,000 Rand lifetime cap on contributions, which means in your lifetime you cannot pay in more than 500,000 Rand into these types of investments. Now, at the current rate of 33,000 Rand a year, it's going to take you about 15 to 16 years to reach that cap. So don't worry too much about that. But keep in mind, there is absolutely no cap on how big this can grow. You can only contribute up to 500,000 Rand, but this can grow up to 2 million, 3 million, 4 million, or 5 million Rand. And all those gains, when you come out one day and take your money, will not suffer capital gains taxes like other investments will. So the earlier you start, the longer you have the benefit of tax-free growth upon tax-free growth. The compounding is a powerful effect. Every investor should have a tax-free savings account and a retirement annuity. It's the two fastest ways to grow your wealth. Let the revenue services help you grow your wealth faster. If you would like to open a tax-free savings account, talk to one of our advisors, or alternatively click on the link below. Follow our robo-advice process. If you want to do it yourself, keep the fees absolutely low and open your own tax-free savings account using the link below. Remember, you need to make your contributions within the tax year before the 28th of February for them to count for that year. Thank you very much.